Hello everyone, DividendFire here, and in today's video we'll talk about 3 REITs and 2 high dividend yield stocks to buy in September. I have allocated $1,000 to invest for the month of September, $500 from the month of August, and another $500 from the month of September, and I intend to allocate this $1,000 this month, and I'll be picking of these 5 stocks I mentioned in this video. I'll be picking 2 of them, and I'll split this $1,000 to invest in 2 of them. The first one will be a REIT, second one a stock, third one another REIT, and fourth one a stock, and the fifth one will be also a REIT. So with no more delay, let's start. So the first REIT of our list is Realty Income. I already have shares of Realty Income in my portfolio, but I will probably be adding more at this month as I'm really happy with the current price. So Realty Income year over year is down 13%. Realty Income is a super solid REIT on the REIT industry with a good diversification and a very good track record for the stock. Realty Income is also well known as the monthly dividend stock because they pay dividends every single month, and it's really nice. Realty Income is a mainly commercial REIT, but also diversified in other industries such as industrials and other industries as well. Even recently as well, they're getting into gaming industry. Going over the dividend stats. So the dividend yield is just over 5% and it's a really nice yield for Realty Income. The payout ratio here, they're considering the FFO ratio for REITs. So 74% is a decent. The growth rate is not the biggest one, but since we're getting a nice starting dividend yield, I'm happy with this growth. Realty Income is a huge and solid REIT. So their growth a bit slower since the scale, since the size of the portfolio, the growth starts slowing down. But it's great to see that the reliability is really important. And they have a really nice consecutive dividend increase of 29 years. Here's in Seeking Alpha, they're saying 25 years, but actually it's 29 years if you look to the investor relations website of Realty Income. Moving on to the second of our list is Verizon, ticker VZ. Verizon, the infrastructure sector, the network sector, telecom to be more precisely. And they offer cover for fiber, Wi-Fi, 5G, and all those things. Verizon have won many awards on the industry. It's considered the highest quality on the industry. So I really like Verizon. And year over year, Verizon is down 16%. And just this year alone is down 19%. So it's falling a lot. And it's a stock that I already own on my portfolio, Verizon. Due to the slow growth Verizon face on the business, the market is not perceiving Verizon very well because it's slow growth, and recently there's some issue with some legacy cable that they could end up being sued and have some lawsuit. But I think it's a bit overreacted, that information, but we will be seeing in the following the years. So Verizon, out of this spot, you get over 7%, nearly 8% in the current price. And I really intend to add more shares of Verizon this month. I'm highly considering. By the end of the video, I will say from these 5 options I'm talking here, maybe the two more likely that I'll be adding to my portfolio this month. So the payout ratio just a bit 50%, so around there 50%. It's strong, solid. I don't think they will be cutting dividend. People are really afraid that Verizon cut the dividend. I really don't think Verizon will be one of them. They will be increasing the dividend probably in a slow rate, but I believe they will increase. And since I'm getting a massive yield by just out of the spot, I can take this low growth, and we never know if the industry start getting some better growth after a few years or even decade. But don't need to think much of a growth when I already have a really nice starting yield and slow growth there that can at least keep up with the inflation would be already be very good. So I hope Verizon can take up to it. And overall, Verizon is a really solid stock that have a slow growth for the moment, but for the long term, I believe they will be a good investment with a really nice starting yield, and will be a very nice punch to my portfolio to be increasing this dividend. So it's a stock that I already own and intend to add more in this current price that I believe to be a really, really good price for this stock. And just before moving to our third stock of this video, here I'm DividendFire, and I'll share everything about my strategies and how I'm going for my financial freedom to achieve my retirement as early as possible. I will be very aggressive to this goal, and I'm sharing everything, every steps, so you'll be able to see all my progress. I highly recommend you to subscribe to the channel to support the channel, so I continue bringing more video here. And also so you can see, my progress. Sometimes you see over there portfolios of over 2 million, over 100,000, and now you have a chance to see the progress of a portfolio there just a bit over 10,000. So you'll be able to see basically from the start, and so it will be an interesting journey to follow on. I have many videos here that talk about my strategies, what I'm doing, how much I invest per month, what is my monthly salary, and how much percent I invest from my salary as well. Sometimes I give some life updates. So I highly recommend you to subscribe to the channel if you want to follow this journey from the start to the glory. So back to our third stock, more precisely our REIT, and also on the telecom industry, CCI Crown Castle. So Crown Castle basically offered the structure for companies such as Verizon, AT&T, T-Mobile. So they basically offer the infrastructure for this telecom industry. Other stock from the very strong REIT of this sector is American Tower, is the biggest one, but in the current price, I prefer at the moment CCI Crown Castle is also a REIT that I already own. So year over year, Crown Castle is down 28%, just this year alone down 43%. Not just Crown Castle, but the whole industry of REITs are falling quite a lot this year due to the high interest rates, as by the REITs structure, they all have quite a bit of debt. They kind of, as an industry, they kind of usually have a leverage since they always return a very good amount of dividends to the shareholders. They end up in have less capital to reinvest in the business and end up being more prone to get debt so they can reinvest in the business so their business can grow. That's a bit part of the REIT business, I would say. But still, we don't want to get too much debt, but yeah, there it is. Most of them will have some sort of leverage there on their business naturally, I would say. So Crown Castle has a market cap just over 40 billions. A really nice dividend yield of over 6%, a really nice start yield. And you say, okay, a high yield usually comes for low growth. Not for Crown Castle. Okay, it's understandable that Crown Castle will have around 1 or 2 years there with low growth, but the company state in their latest financial statements that will be 2 years of slow growth, but they will be able to keep up to around 8% of growth rate for the following years. So the company is confident that they will have still a very good growth rate on the following years, not the next 2 years, but after that. So a really nice dividend yield with a possibility and a probable good growth. This will be a very strong combination. And FFO payout ratio of just a bit over 80%, just around 80%, is still not bad for a REIT. And a dividend growth of just 8 years. So 8 years growing this dividend, 8 consecutive years growing this dividend, nearly getting 10 years. I like to see this commitment with the shareholder, and I hope and confident that we'll still keep growing this dividend for 10 years, and I hope one day maybe even see them become a dividend aristocrat. It would be nice, yeah? So I'm bullish about Castle, and that's why I invest in Castle, and I also intend to add more shares of Castle. Not sure if I will add this month, but definitely at some point I'll be adding more shares, and I just hope the market keep this price down so I can have time to load it up more on my pocket. It would be really nice, and I'm really happy to have this Castle in my portfolio. Fourth stock of this video, and it's Pfizer, ticker PFE. I don't have, it's the only stock on this video that I don't own my portfolio yet is Pfizer. So Pfizer is just down 32% year over year, just year alone down 27%. There's a market cap nearly of 200 billion. And why Pfizer is falling so much? Sales have been not as high as used to be on the COVID time. So COVID time they made tons of money with the V-shot, and now since the COVID is not much a war as it was, so these sales on vaccines and stuff have went down a lot. So this low growth, the people kind of lost a bit in interest, and stock investors lost the interest. But the tons of money, the billions and billions they made just on the COVID time, they are using this huge cash to reinvest in the business. So even though Pfizer is down quite a bit now and low growth now, all these acquisitions they have been doing since this huge amount of money they earn from the COVID alone, they are doing many acquisitions that eventually these companies, these acquisitions they're making, they will starting return money. They will be having return on this investment, and I can see for Pfizer we will end up have a very nice possible growth a bit for the future. So I really intend to at some point be adding Pfizer to my portfolio. If you follow my videos, my previous videos, if you're more aware of my strategy, you know that I like to start investing in the stock when they have at least a starting yield of 5%. And Pfizer is nearly there. Pfizer is nearly there. So Pfizer is just getting close to the 5%. And when touch that 5%, I might be adding Pfizer to my portfolio. But just remember, all these stocks I'm talking in this video is not financial advice. You should do your own research and just buy a stock on your own beliefs. I'm just sharing my experience just for entertaining, and I just like to share my experience. I think it's really nice. I like to see videos of other investors sharing their experience, and I like to do same as well. So keep this in mind. This is only my investment journey, and you should research to do before doing any investment. Okay. A really nice payout ratio, just around 30%. Have a nice starting yield with a low payout ratio. That's really nice, because hardly the company will ever need to cut this dividend anytime soon. A really nice 12 years consecutive dividend hikes there is really nice. I love when the company have at least 10 years of increasing their dividends consecutively. And 12 years just past that is really nice to see. And it's a really nice 5-year growth rate for the dividend as well of 5 years. But it's also good to keep in mind that this growth rate has been decreasing, and might be that one of the reasons that investors are more not very hopeful for the growth of the business. We can see the dividend growth rate for 10 years was 6, and 5 years went down to 5, and 3 years to 4, and just the last year was just over 2%. So we can see these growth rates coming down here. So understanding some shareholders have a worry about that, but just when you think that the amount of money they made with the COVID, pre-COVID and around COVID with the COVID shots, and now all this acquisition they were able to do with all that money, I have high hopes for the future of the company. And it's a company that I'm still studying, so I'll be doing more in-depth study on it, and I can bring at some point some simplified video analysis on Pfizer. So yeah, leave it down in the comments if you like to see a video about that. And moving to our last stock here is another REIT, is MPW. MPW is being on fire. Just year over year, they're down over 40%. Just this year alone, down 50%. A huge amount of short, over 21% short interest. So the people are selling MPW a lot, and I think it's a bit overreacted in the market. I don't agree. That's why I own MPW myself. But yeah, they did cut the dividend. So there's a lot of turmoil coming about the stock. A lot of news coming here and there. So the sentiment for the stock at the moment is really bad, but I'm bullish about the stock, especially now they cut the dividend, and after the dividend cut, they are in the current price, they're offering 90% with a payout ratio of consider the FFO here like around 7%. And yeah, forget these dividend hikes here, because the consecutive dividend hikes, because they cut the dividend. So this is zero now. This is a sad part. But especially after the stock cut the dividend, and you cut the dividend basically by half, and you still have a huge dividend and have a stronger balance sheet, as well as they will have more remaining money to pay debt and reinvest in business. And at some point, environment that we're facing, the interest eventually will start coming down, and not just MPW, but the majority of the REITs, they will start be up in the market. I believe the market will price them better. This is my own opinion. I really think MPW is really being having an unfair look. I think it's a bit unreasonable what the market is doing with MPW. Either I am not seeing properly, or the market is really overreacting, and we just discovered that on the long run. But I didn't say that before, but just if you don't know MPW yet, is a REIT that invests in hospitals. So they have over 400 hospitals on their portfolio, and hospitals are a thing that we need. So I don't think MPW, will go anywhere. We still need hospitals, and MPW will be around there. And if the tenants is struggling to pay the rent, eventually MPW, I believe they will be able to replace these tenants, as they have diluted Stewart's Health, their biggest tenant. They used to have 40% of the. They used to be 40% of total MPW's assets, and now they're being diluted around the 19%. So tell me a story that, yeah, MPW probably will be able to remove some tenants and replace these tenants if they're struggling. Let's see how this will play. But yes, it's not a very volatile stock, but in the last years, it's really volatile. So if you can't take much volatility, I would stay away from this stock, because this is being very, it's been kind of in the dark side of the investors lately. So I would avoid if I were you, if you can't take much volatility. But in my own portfolio, on my own journey, I see this as being a good opportunity, but I am myself, so it is only me. Okay, this is my journey, so you should do what you believe to be better for you. Remember that I'm not a financial advisor, so don't take this as financial advice. And a quick thing, I nearly forgot. I said that I would say in the end of the video which of the 5 stocks would be the 2 that would be most likely to be adding more shares to my portfolio at this month of September. And these 2 shares are Realty Income. So probably I'll be adding more shares of Realty Income my portfolio this month, and MPW. I really think I'll be end up adding more shares of MPW in my portfolio, as the current price for me is just really low and I see these opportunities. So this is the two REITs that I'll be really likely to be. I can change my mind. If I do, I will share with you guys. But the most likely ones that I'll be adding to my portfolio this month will be Realty Income and MPW. Saying that was the video for today. I highly recommend you to subscribe to our channel DividendFire, as I'll be sharing everything. And if I'm wrong about MPW or any other these stocks that I'm sharing in my channel here, you guys will know if I'm wrong, and you guys will know if I did the right choice, and time will tell, okay? So I'll be bringing updates as soon as I have updates in my portfolio. I will have a video every Sunday, so see you next Sunday. Bye.